The volatility is a feature, it's not a bug. The reason it's volatile is because on Saturday night, if you panic and you needed to raise $1 million by selling $1 million of something you own, it's literally the only thing you can sell. You can't sell
That's
anything
true.
else. You can't
That's
sell
true.
your real estate. You can't sell your Apple stock. You can't sell your
That's
car.
so
There's
true.
nothing else you can sell. So if you can't sell it, then by definition, it's not going to be volatile because it's useless. So things that are non-volatile are useless.
Saylor begins by comparing Bitcoin to traditional stores of value like gold and real estate. He predicts that Bitcoin will continue to appreciate over the long term due to its fixed supply and increasing demand. Unlike gold, Bitcoin is digital gold, benefiting from technological advances and being highly accessible as a global 24/7 asset. Saylor emphasizes that Bitcoin has shown strong growth since its inception, with an annual appreciation rate, ARR, of over 50% in recent years. This trend, he believes, will continue, though at a slower pace as Bitcoin matures. He estimates that Bitcoin's market cap will expand over the next few decades to reach roughly 7% of the world's assets. This would amount to a value of around $13 million per Bitcoin, growing at an annual rate of about 29% over 21 years. While it may never match the size of the S&P 500 or global real estate, Saylor envisions Bitcoin becoming a substantial asset class in its own right.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
My assumptions are the US dollar supply is going to continue to expand about 7% a year. And that is the historic rate of expansion of dollars for the past 100 years. That's how I arrive at that. That's just how fast the money supply is expanding if you look at M2. And I think that there'll be innovation from AI. So some things like equities will probably grow a little bit faster because AI is going to have a boost to equities. I think over time, gradually, technology is going to demonetize gold and some of the other stores of value assets that were used in the 20th and the 19th century. But the 21st century, we're going to digitally transform property and transform gold into digital property, digital gold. Okay. And when you look at Bitcoin's growth over the past 15 years, it's been growing more than 100% a year for the first decade or so. And for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like 3 times the volatility of the S&P and 3 times the performance of the S&P index. Okay. Over the next 21 years, I think it will grow faster than the S&P, and it's going to grow to the point where it's about 7% of the world's assets. Right now, it's about 0.1% of the world's assets. And I think that it will gradually approach, but it will never be as big as the S&P index or equities. It won't ever be as big as real estate. But in that world where it decelerates from 50% down to 20%-ish, it will appreciate from 65 or 70,000 up to 13 million a coin in my base case. And that amounts to about a 29% ARR on average over the 21 years. And when it's half the size of the S&P, it'll still be twice as volatile, probably performing 50% better, because it's a 24/7, 365 asset. It's subject to global chaos and global capital flows, and it doesn't have all the risk factors of property or the risk factors of equity to hold it back. Bitcoin's like 50 vol, 50 ARR, and the S&P is more like 12 to 14 ARR, 14 vol. So if you want 12 vol, 12 ARR, you would just buy a diversified equity index. You'll get 1/4 the return. You'll get 1/4 the volatility. And some people like that. If you're going to buy a 50 vol asset, first of all, you shouldn't buy it unless you're going to hold it for the long term. Like a short period of time to hold it is 4 years. A middle period of time is 10 years. The right time horizon is the rest of your life. If you have money that you need to give to your children in 4 weeks, don't buy Bitcoin with it. If you have money you want to give to your children in 40 years, definitely buy Bitcoin with it. In 40 years, Bitcoin is going to be worth a lot more. In 4 weeks, there's no telling what it'll be worth. So think in terms of 0 to 4 years is very safe conventional assets. Think in terms of 4 to 10 years is more like investment things, and think beyond 10 years is that's something I'm buying to give to my great granddaughter, that it's going to be in the family forever. It's like the center of London. It's been passed by the royal family of London down from family to family for 1,000 years. That, if you think of it like that, then you'll go into it with your eyes wide open. The volatility is a feature, it's not a bug. The reason it's volatile is because on Saturday night, if you panic and you needed to raise $1 million by selling $1 million of something you own, it's literally the only thing you can sell. You can't sell anything else. You can't sell your real estate. You can't sell your Apple stock. You can't sell your car.
That's so true.
There's nothing else you can sell. So if you can't sell it, then by definition, it's not going to be volatile because it's useless. So things that are non-volatile are useless. The volatility is what attracts the Bloomberg jockey to put up $20 billion of capital in Singapore. And that person will loan you $1 billion for 5 minutes on Saturday night at 100x leverage if your life depended on it. And you can imagine that, is that a feature or is that a bug? It's just a lot of economic power. And the fact that there's that much economic power in the network means that it attracts all of the traders, and it attracts anybody that wants to either buy or sell with leverage at any time, anywhere in the world. Once you embrace that idea, you realize that if you wanted to buy it knowing what it would be worth next Tuesday, you're a fool. But if you wanted to buy it thinking this is the most powerful digital capital network in the world for the next 100 years, and I've got a long time horizon and I just want to get rich and I'm going to hold on to it, then it's a pretty wise thing to put in your portfolio.
Saylor acknowledges Bitcoin's well-known volatility, but frames it as a positive characteristic. According to him, the fact that Bitcoin can be traded 24/7, unlike stocks or real estate, provides liquidity in times of crisis, making it the only asset one can quickly sell to raise cash on short notice. This liquidity comes with price swings, but also positions Bitcoin as an asset with tremendous buying and selling flexibility. In Saylor's view, Bitcoin's volatility is also what makes it attractive to traders, hedge funds, and institutions, all of whom bring capital and credibility to the network. The presence of these players bolsters Bitcoin's ecosystem and provides more opportunities for liquidity. He cautions, however, that Bitcoin's short-term price is unpredictable, so those investing in it should have a long-term mindset. Saylor emphasizes that Bitcoin is best held for decades or even generations, aligning with the ethos of trophy assets that are preserved rather than sold.
When you have trophy assets, you never sell them, right? Bernard Arnault never sells any of the brands of LVMH, right? When you own the New England Patriots, you don't sell it. You try to gift it to your great-great-grandchildren if you can solve the tax issue. The royal family of England doesn't sell the Middle of London or Kensington Palace or Buckingham Palace or the like. So you don't sell things that are scarce and desirable that everybody in the human race is going to want. You buy and you hold them forever. MicroStrategy is a Bitcoin treasury company. What we do is we raise capital via cash flows from the business, from equity, by issuing debt, by doing fixed income financings. And then we buy Bitcoin with it. And the people that buy our equity want high performance Bitcoin and high volatility Bitcoin. So we give them more volatility and more performance. And then other people that buy our fixed income instruments, they might buy a convertible bond. They want more security. They want a risk protection. They want less volatility. They want some of the upside, but they would rather have downside protection and give up some of the upside. And they can't really buy the equity. And then, of course, there's some people, that are option trader. They want 10x the volatility. So some people want extreme leverage, extreme volatility. Other people want very little leverage. They want a lot of risk protection. So MicroStrategy splits the capital, or it refines the capital such that we provide one set of investors with a lower volatility, lower risk way to participate, and then another set of investors with high voltage methods to participate. With regard to my suggestions for potential investors or people that are interested in Bitcoin, I would say before you put money into Bitcoin, put time into Bitcoin. Yeah, the great thing about studying Bitcoin is you won't really understand money until you've seen perfect money. So Bitcoin takes you down this path of the theory of money, and then you start to understand what's bad money and why it's bad, and what's good money and why it's good. And then that'll take you into the theory of investment. Like when you actually buy a bunch of corporate stocks to save your money, you're not saving, you're investing, you're making a bet on the stock. And so you start to understand the difference between saving your money and investing your money. And then once you understand the theory of investing, you start to understand the theory of assets. What's the difference between a commodity and a security? And why is a commodity normally a crappy investment unless it's Bitcoin, in which case it's a good investment? And then you start to understand commodities versus scarcity. So all of the investment theory, economic theory, and monetary theory that comes about when you understand Bitcoin will cause you to realize Bitcoin is just a better idea. And it will also help you make your investment decisions and make your savings decisions and navigate geopolitical currency markets and understand why does one government crash and burn, and why does hyperinflation take place one place and not another place, and how can you insulate yourself and your family from that. Before I invest in this, is it going to be hacked? Is it going to be banned? Is it going to be copied? Those are the big three questions. And it's hard to know that in the first year of the network, but we're now approaching year 16. It'll be the 16th anniversary of the network on Halloween. That's the 16th anniversary of the white paper, that is. So after 16 years, it has been copied 10,000 times. They all failed. It's the winner, right? It's the network that all the smart, rich people in the world chose. It's the bank and cyberspace. If you show up in a city and there's 10,000 banks, and you have a bunch of money, and the question is, which bank should you put your money in? You go find every smart, rich person that you know in the city, and you say, hey, where do you put your money? And if they all put their money in one bank, you're probably not going to put your money in a bank that's 1,000,000 times smaller than them, that only has poor, stupid people. So it was copied. It's the winner. It is the bank that's of choice of the smart money in the world. And will it be banned? You couldn't know that for 15 years, but the IRS legitimized it as property in 2014. The SEC approved a host of Bitcoin ETFs in January of 2024. Today, it's held by nearly 100 publicly traded companies. Every major regulator has certified it as a commodity, not a security. That was a judgment by the former head of the SEC under Trump, and that's the judgment of the current head of the SEC, Gary Gensler. So it's not getting banned. And that takes us to the third question is, will it be hacked? And Satoshi's got about $70 billion in a bunch of wallets that any hacker could have if they could crack the code, and it's been there for 16 years and nobody's cracked the code. It hasn't been hacked, and the reason it hasn't been hacked is because it's defended by a wall of digital energy, about 730 exahash. That's more computer power than all of the computers that Amazon or Microsoft or Apple could, working jointly together, could generate. So it is the strongest wall of computer power in the world.
Michael Saylor's perspective offers a compelling case for Bitcoin as a valuable addition to a diversified portfolio, especially for those with a long-term view. While acknowledging Bitcoin's volatility, Saylor argues that its unique properties make it an ideal store of value in a world where inflation erodes purchasing power. For Saylor, Bitcoin's resilience, liquidity, and growing legitimacy among institutional investors underscore its potential to appreciate over time, potentially reaching millions in value per coin. As he advises, those interested in Bitcoin should invest time in understanding it before committing financially. Bitcoin, in Saylor's view, is a transformative asset, a digital hedge against economic uncertainty and a tool for generational wealth preservation. This visionary perspective suggests that while Bitcoin's future remains volatile, its core value proposition as a decentralized, scarce, and globally accessible asset remains steadfast.
Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you. See you in the next video.